Today we ask, is it time to review your integrated shield plan? What sort of changes do people make and when? Let's find out with Dr. Morrison Loh. He is Head of Medical Directorate, Raffles Health Insurance, Director Commercial for Raffles Medical Group. Good morning, Dr. Loh.
Hi, good morning, Michelle. How are you today?
Good of you to join us. Let's start with this question. Why is
Hmm.
it potentially expensive to buy and then forget about your integrated shield plan? And are there opportunity costs to doing so?
Well, that's a good question. So, health insurance is very unlike any other insurance, for example, motor insurance. You only think about it when you are hospitalized or having to use it. And most of the
Mhm.
time, where that happens, as we all know, it's a bit too late. You realize that you might have a lack of coverage, inadequacy in coverage, and all. The cost of an integrated shield plan, if you look at it on a year-to-year basis, is relatively cheap and affordable, I suppose, a couple of $100 to 1,000 and all. But if you look at it from an angle of a lifetime value, it hits around
Mm.
$100,000, and that is actually quite substantial and significant. So I think if people who don't really look into these aspects in terms of financial planning will tend to get a bit of a shock when they put the numbers in front of them and they realize, oh, actually, this is quite a substantial amount and I need to pay good attention to it.
Yeah, good point. When I talked to people about doing this show, I had a couple of surprise reactions from people saying, I didn't even know I could review my IP plan. So,
Mm.
is there a need to review your IP on a regular basis?
Well, yes. I think most of the time, many people have the integrated shield plan purchased by their parents, for example, when they're young. So, and
Hmm.
many of them do not even really know what kind of shield plan they have, what does it
Yeah.
cover, what it entails. And when kids are being, sorry, when parents buy for their kids, the shield plan tends to be a basic one. It's only upon the need for use of it, then they realize, oh, there's so much inadequacy. So I think it's good to review what is the coverage that you have, the level
Yeah.
of coverage, and also think a little bit more. If there's any family history of chronic conditions and all, you might want to think
Hmm.
ahead, you know, and purchase something that provides you with better coverage, just in case when this sort of things happen, when there's a need
Hmm.
for hospitalization, you're adequately covered.
All right. So we're all about making the best use of your money on this show. And when it comes to investing, I guess always say when it comes to investing, the best time to have started is yesterday. The second best time is today. When is it a good time to review your IP plan?
Hmm. There are many junctures and milestones in life, I suppose, that might be a good time to consider. First and foremost would be perhaps when one starts making his or own money, when you are
Yeah.
financially stable, or when you have ability to bring in your own income. That's where perhaps you want to think about, oh, okay, looking at my medicine, looking at my monthly income, how much can I set aside to do adequate medical coverage? Probably the
Hmm.
second time you want to look at it is when you have a family, you start covering for your spouse or your dependents or children. That's where, okay, another time to consider how much can I set aside and what is adequate for them. Younger
Hmm.
kids or younger people tend to be generally healthier. You can play around with the type of plans. And the next time, I suppose, the next milestone would be when you hit retirement age.
Hmm.
Is there a need to scale down, or is there a need to increase coverage depending on how much financial stability you have and also your own health? So all these factors play together, and these are some of the milestones I think one can look into in terms of providing better financial planning and health coverage.
Do you think there are any particular implications of retirement that would-be retirees need to think about when it comes to their IP?
Hmm.
You mentioned, is it time to scale down? Is it
Hmm.
time to scale up, maybe? Any other
Hmm.
implications of retirement on one's integrated shield plan?
Hmm. That's a very good question, Michelle. So many factors come into play now, right? In when retirement, in a way, it means your income is stopped or in a way reduced severely. Number
Yeah.
two, as we get, as time goes, we also have to think about medical inflation. Healthcare costs is rising.
Mm.
I think there's no secret. In Singapore, in many countries, right? If you
Mhm.
do not have adequate coverage, that means you have to put money out upon hospitalization more readily. And third, um, uh, different from wine, it's like as we grow older, our health deteriorate a little bit more, higher risk of catching chronic illnesses and diseases. So all these factors play a role, and you need to think about at this stage in my life, um, I have to balance between financial stability and proper health coverage. And all these come hand in hand. And it's always good to plan ahead and think ahead.
Those are some great lifetime milestones to think about. Dr. Loh,
Mm.
I wonder if you can help us out, help us understand the sort of key questions we should be asking ourselves when we have decided on embarking on a review.
Um, you mean what question should I ask at all these different stages of life?
Yeah.
Mm.
Or what question should I ask once I've decided, okay, I want a review? What questions should I be asking when I carry out a review?
Mm. So, for example, number one is the coverage. Different shield plans has little differences in terms of their coverage, in
Right.
terms of the limits, whereby the hospital bill, there's always different levels of limits that they'll cover. Number
Mm-hmm.
two, you also want to think about do I want to purchase a plan that gives me the full range of support from private hospital, private healthcare to public healthcare? All these plays a role in terms of how much you need to set aside each year for them. And thirdly, I think when you plan for your family, this also gets a little bit trickier, right?
Mm-hmm.
At what age do I start to tell my children, okay, probably time for you to be financially more independent and take over your own shield plan and your own payment method? So these are little things, I suppose, good to pen down and perhaps even good to discuss with your own financial advisor who can give you more insights as to what is the best plan that's most suited to you from a financial angle and also perhaps a healthcare point of view.
You're listening to Your Health, Your Wealth. My guest today is Dr. Morrison Loh. He's head of Medical Directorate, Raffles Health Insurance, Director Commercial, Raffles Medical Group. And our topic today is, should you review your integrated shield plan? More right after this. Should you review your integrated shield plan? Dr. Morrison Loh is head of medical directorate at Raffles Health Insurance. As head of medical directorate, he's chiefly responsible for medical adjudication, underwriting, panel management, business development. And so he integrates his skills and his experiences as a medical doctor in various disciplines to help provide relevant healthcare financing solutions for both corporate clients and policy owners. So we're very glad to have him on the show today. Dr. Loh, let's take you some scenarios that over the years we've heard from our listeners whenever we
Mm.
talk about integrated shield plans. These are some common questions. So help us out. If someone says, my integrated shield plan is inherited from when my parents were funding it from their own MediSafe accounts, should I
Mm.
review it? Because aren't there costs for entering a plan later in life?
Mm. Correct. So I split it to two. Most of the time, when parents purchase a shield plan for their children, it's a very basic plan. And from the years of 0 to 18, most of the
Hmm.
plans are pretty standard in terms of coverage and the premium. But as you grow older, you need to think about what is most adequate for me, right? And this is where you will have to perhaps fork out a little bit more from your own savings and also MediSave. It is possible to stop your current shield plan and switch over to another one. These are all possible, and the best way to go about it would be to do some study or perhaps speak to your own financial advisor to get some advice.
All right. So it might be a good idea to think about what your decisions are when it comes to the kind of medical care you want. Might be quite different from what your parents decided for you. Now,
Mm.
here's another scenario. We've heard that people have been discouraged from switching providers midway. Is it true that one could be refused an IP if you terminate an IP with one provider and then seek another provider?
Hmm. Well, technically, everybody is allowed to switch a provider. Right? You're
Mm-hmm.
able to terminate. It's a yearly renewable policy. So every year there's an auto renewal process. Now, the catch is that every time when you apply for an IP plan, you need to undergo what we call medical underwriting. This is where the provider will access his or her healthcare records, medical records, and all, and determine whether he or she is able to sign up for a new plan.
Mm-hmm.
So I suppose every time you tend to switch, you need to go through that assessment process.
So you need to prepare yourself for the medical underwriting process, and you won't be covered during that underwriting period. Is that right?
Yeah. There's a gap whereby after termination, there is still some coverage, but there's only a short timeline. So there's a quite a big possibility that if you are not ready and you have not
Mm-hmm.
decided and
Mm-hmm.
you make a move to terminate your shield plan, there will be a moment of lack of coverage until uh, you have been accepted to the new provider.
Okay. Back to the question though, is there a real possibility that you could be refused an IP given the medical underwriting process?
Hmm, that is possible because the new provider might deem that your current state of health or your previous health record would be too much of an insurance risk to undertake, and hence they might decline the application. So you might end up with no proper coverage if you terminate your existing plan too harshly without securing or without speaking to your financial advisor to access the possibility of acquiring a new one.
And thanks for that information. I guess it buttresses the argument that it may be a good idea to do it when you're younger and
Mm.
you have possibly less medical complications, and then you can fully exercise your wishes when it comes to the type of medical care that you want without the risk of any sort of undue complications arising from the switching. Now, here's another scenario for you. If I think I'm overinsured or that I'm overpaying given that my needs have changed versus when I took on my integrated shield plan, what can I do, Dr. Loh?
Mm. Well, you can always downgrade your plan to something um, of a more affordable premium basis, but obviously that comes with a cost, which is the level of coverage will also be lesser. But it's almost like a buffet syndrome, right? You pay, and then you try to take as much as you need actually. So the best advice that we try to give all policyholders and even my own patient is go for what
Hmm.
is appropriate and what is necessary. So it's possible to downgrade your plan, and most of the time, during downgrading your plan within the same provider, um, you might be able to do away without medical underwriting, but you need to check with your own provider and your own financial advisor for the details of that.
That's an absolutely great point. All right, Dr. Loh, before we let you go, can you remind us for the listeners who have just joined us and you're listening to Your Health, Your Wealth, warm welcome. Dr. Loh, what are some key reasons that you may want to think about for reviewing your IP plan?
Hmm. Like I said, the different stages in life, the different milestones when you start making your own money, when you start working, when you're beginning to have your own family, and we are moving towards the age of retirement. Look at your current financial status, look at your own healthcare status and your medical records, weigh the differences. Do you really need to have this sort of level of coverage? And then also look at your financial status. How much can you afford to cover for your entire family? I suppose these would be some of the take home message and advice I would give to all the listeners.
I've never been more comfortable talking to a doctor. Dr. Loh, thank you so much for being with us.
Thank you very much, Michelle. You take care.
Dr. Morrison Loh is head of Medical Directorate, Raffles Health Insurance Director, Commercial, Raffles Medical Group. Next time, how much is enough? How do you get a sense of what is sufficient coverage for yourself when it comes to your integrated shield plans? And, if you're overinsured, you are overpaying every year. So we're going to help you out there. Tune in next Friday, 10:05 a.m. for more.
Money FM 89.3.